package from the Finance Ministry is done, and the verdict from the economists and the markets is sombre. GDP forecasts for the current year for India now range between -3 to -5%, a contraction that our generation hasn't seen. Is the fiscal policy missing the point? What has it delivered at all so far? What is the space left for the Reserve Bank? And finally, are the policy unlocking, like freeing the agricultural market and other reforms in mining, going to help at all? For these and other questions, I have with me a panel of economists. Joining me now are Samiran Chakrabarti, the Chief Economist at Citi, Soumya Ghosh, the Group Chief Economic Advisor at SBI, and Sonal Verma, the Chief India Economist at Nomura. Well, all three of you, welcome and thank you very much for joining me. Well, Soumya, let me start with you first. What is your sense of the fiscal package? What was your GDP forecast before and what is it after? Has it changed at all?
Good afternoon, Latha. I think our GDP forecast before the lockdown, which was announced 17th May, was at -4.7%. And given the fact that lockdown has now been extended beyond 17th May, and also the part is that the package actually consists of a direct fiscal impact of only around 1% of GDP, I think there will be a definitive downward bias to our GDP estimates, because it now seems that a large part of the activities will remain non-operational in the first quarter itself. And the second point is that these will be some of the sectors where the migrant workers were working, and these sectors also will be non-operational during the second quarter, because second quarter is always a lean month because of the monsoon activities. So I am talking about the construction sector. So if I take all these things into perspective, I think that the growth numbers will have a definitive downward bias from our current estimates.
Okay. Sonal, you already were at a very somber -5.2% even before the steps were announced by the Finance Ministry. Has it ameliorated your idea of the economy at all? After all, there is a big largesse for MNREGS. There is a significant increase in the limits set to banks in terms of the Kisan credit that they will have to deliver. Will all this improve the situation of the rural economy, for instance?
Latha, I think, rural and overall from a growth perspective, the fiscal or the economic package doesn't really change the growth assessment. But I think it's important to take a step back and ask the question, what is it that the policy response should be right now? And to our mind, the policy response needs to be a three-phase strategy. The first phase, which is where we are right now, where we are still fighting infections, the policy strategy needs to be to support and help firms and individuals survive, given it's a big cash flow shock. The second phase, which will come later once the virus is under control, that's when demand stimulus needs to kick in from the government. I think giving a demand stimulus right now when people are not going out and buying goods, etc., would have led to essentially wasted bullets. And phase three is when you tackle the financial sector issues because of the aftermath of the destruction left in the wake of COVID-19. So what the government has announced is really phase one to our mind, which is survival phase strategy, where you're giving cash support to MSMEs, to individuals, addressing the credit risk of the NBFC sector via full or partial credit guarantee. So in terms of the government policy response, they've done what we would have expected them to do right now. Going forward, they will need to come through with more demand supportive measures, but that really comes in much later.
No, but Sonal, I was asking you whether after listening to the package, you wanted to trim your forecast itself. Are you still of the opinion that the contraction can be as severe as -5.2 this year?
I think as of now, we don't see a reason to be changing our numbers, Latha, but it's important to understand that if the government did not come out with these cash flow support measures, then there would have been a medium-term impact on the economic growth potential. So these measures really help maintain the medium-term potential. They do not change the near-term growth trajectory. So I think it's important to understand that aspect.
Okay. No, I'll come to the medium-term potential and the supposed reforms in agriculture marketing, in coal mining reforms. Many of them were reiteration. We have heard coal mining, commercial coal mining 3 times before. We've heard the power sector reforms before. So I'll come to that reforms bit in a second. Somiran, I wanted to ask you, your forecast when we last met was plus 0.6. And now I think you've moved to minus 3.5, if I'm not mistaken. Don't the package make any positive difference at all in terms of buffering the rural economy, as I asked the others?
So 2 parts to our growth forecast revision. The first part is simply the extension of the lockdown. And if you see in our revised numbers, roughly half of the decline in our growth forecast is coming from just the revision in the first quarter's GDP growth numbers, which is almost like mechanical in nature, that the more number of days that we are going to be in lockdown, the activity levels will be relatively lower. So that way, I think part of the GDP forecast revision is simply a mechanical or an arithmetic application of the lockdown extension. The other part is connected to the stimulus, where we were expecting a stimulus worth about 2% of GDP, and what we've got is roughly again half of that. So yes, I agree with Sonal that there is a risk, or there is a hope that some additional demand stimulus can come later in the year, which we have written about also. But based on that hope only, we cannot keep a forecast alive.
Yes.
So at this moment, our forecast is only based on what has been announced. And because that announcement has been lower than what our initial stimulus expectation was, we had to downgrade the GDP forecast for the last 2 quarters of the year, where the stimulus with a 3 to 6 month lag would have had a positive impact. So that's why the GDP forecast revision looks quite sharp, from plus 0.6 to minus 3.5. But it's important to understand the nuances of that revision as well.
But Samiran, what about the fiscal central government has not come with any major fiscal stimulus yet, but it has given a 2 percentage point extra borrowing for the states. Some of it, of course, again will be to make up for the tax shortfall. But there seems to be a little space for the states to spend. And anyway, even at the current juncture, the state expenditure budgets have become much larger than the central expenditure budget.
Absolutely. So by our estimate, the central tax devolution to states will be 0.9% of GDP lower than what was budgeted, because of the tax revenue shortfall at the central level. So on the back of that 0.9% of GDP shortfall, states are automatically getting only a 0.5% of GDP additional increase in borrowing limits. So there is still a gap of 0.4% of GDP there. And the 4 reform measures that the center has proposed, we need to see the fine prints of them, that how we can make them into quantifiable targets for the states to meet, and to what extent the states are prepared to meet them in a short span of time, because this has to be done within the course of this year to be eligible for that borrowing limit. And if all states just bunch up in the last quarter for that extra 0.75% of money, that might be difficult for the markets to handle also. So there are practical issues around how you run this program, because it can't be that the entire 1% plus the bonus of 0.5%, the entire 1.5% of GDP borrowing just gets into 4th quarter of the fiscal. So we haven't heard the last word on this, but clearly this is some flexibility given to states. I just wonder that whether this was more in the remit of the Finance Commission to provide these kind of structures rather than directly coming from the central government.
Oh yes, I wrote strongly about it that perhaps good behavior of states and milestones should logically come from the Finance Commission. It is surprising that it comes from the Finance Ministry, but that debate for another day. Shaumya, I wanted to know from you whether we are going to see, what is the action you're penciling in from the Reserve Bank? First, on the issue that of states itself, since there is a large state borrowing program on the anvil, and that can make nonsense of monetary transmission. If SDLs are going, bond yields of the sub-sovereign are rising, then the cost of borrowing for corporates will rise. So purely in the interest of monetary transmission, you think SDLs also may be purchased in OMO, or in some way the RBI might help states?
Yes, I think, Latha, I will just structure my answer in three parts. I think for the first part, which Samvidhan mentioned very briefly, there is the catch here of the additional borrowing. I think the additional borrowing is tied to the conditionalities. And if you just do a juxtaposition of the conditionalities, I think the states will not be borrow more than 3 lakh crores out of 4.28 lakh crores estimated. So that's the first thing. The second point regarding the SDL is, yes, you are correct, because the states borrowing are mostly backloaded in the last quarter of any fiscal. If you look into the history of the state development borrowing. So if that is the case, that is going to create distortions in the market. The other thing, final thing which I'd like to say about this, the states, what the RBI can do, see, there are two things. Every state has its own commission. So every state constituent assembly can take a call on whether to reach the fiscal deficit or not. But I think in the FRBM bill, there is also a clause which says that if there is a crisis act of God, that could be superseded by the center itself, and then the center could actually allow all the states to supersede the fiscal deficit. So I think that word has to come from the center or even the RBI to say whether the states could actually bridge the fiscal deficit on their own and get it passed by the constituent assemblies, or it could be just a dictate from the RBI and the center that in a situation where there is an act of God, this could be done. And the final thing which you wanted to ask me about the RBI, which actually we could discuss it in a greater detail, I think also on the regulation front, now that the lockdown has been extended to 31st May, the moratorium which was due till 31st May, I think there is a call which the RBI has to take very quickly of whether extending the moratorium. If the moratorium says extended by another 3 months, that means it makes till 31st of August. So till 31st August, if the companies were embracing the moratorium, it will be very harsh on these companies to expect that they come up with all the repayments by the 30th of September. In case they don't do it, I think those accounts will be classified as non-performing. So that's another call which the RBI has to take on the regulatory front.
Oh yeah, that is only a reclassification, or perhaps they will allow a restructuring, but that doesn't add to output. Of course, it will prevent further financial dislocation. Actually, I have to ask a lot more about that. What are the options available to Reserve Bank together with both banking sector rules and monetary, and as its role as a monetary authority? Plus, what is the takeaway from the so-called reforms announced in terms of agricultural marketing and maybe some opening up in the mining, coal and other sectors? Can all this add up to something if implemented rigorously? Those questions to my guests in a minute after this break.
If the market downturn is your worry, soon there could be a recovery, and that will be index investing key story. Rather than betting on stocks and choosing mutual funds, choose the entire Nifty index. Invest in Nippon India ETF Nifty Bs, an ETF with a long track record and high liquidity. Visit our website or contact your financial advisor or broker today. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
अबे 1 घंटे से कलर लगाने में लगा हुआ है।
टाइम लगता है बॉस।
Take it easy. इंडिका इजी से सिर्फ 10 मिनट में कलर कर।
इजी कैसे? हेल्प तो चाहिए ना।
इंडिका इजी का मतलब क्या होता है? मतलब खुद कलर कर।
पर हेयर सेफ्टी?
इसमें है आंवला भी, हिबिस्कस भी। नो अमोनिया, नो टेंशन। ग्लव्स लगा के मिक्स करो, शैम्पू जैसे आसानी से खुद अप्लाई करो, 10 मिनट बाद वॉश करो, फुल कलर। अब 10 मिनट में खुद कलर करो। इंडिका इजी, टेक इट इजी।
Welcome back. There was a 5 tranche of announcements of fiscal steps from the Finance Ministry over the past 5 days. But what we get on Monday morning are markets that are down by about 3 to 6%, and economists who have downgraded or who have lowered their estimate of the growth of the Indian economy. Rather, the contraction has been deepened. Many economists now coming with a possible 5% contraction of the Indian economy this year. So what have they made of some of the steps announced? I've been speaking with Soumyakanti Ghosh, Sonal Verma and Samiran Chakrabarti. Samiran, on this steps announced for agriculture, the proposed changes to the Essential Commodities Act and the recognition that the farmer should have more options to sell to, removing barriers in interstate trade of agri. Can all this be a magical moment and increase both output and incomes of rural areas?
I think it's extremely significant. Look, as you said a while back, that a lot of these is not new. But the fact that the government is pushing for certain things at this point of time, that prioritization is signaling to us that what the government wants to achieve. And I think it's hitting the nail on its head that the better price discovery in the agriculture sector is key to increasing rural incomes on a sustainable basis. As we know that the agriculture production is already more than what the country's demand is. So we are an agriculture surplus country now. So just by producing more, we are not going to achieve better overall income for farmers. So the value add part of it for the farmer will come from the 1 lakh crore agricultural infrastructure setup that is going to come.
Provided it is.
And I'm hopeful that this is something which the government will really push for. It suits all the needs. And the other part is the reforms connected with agricultural marketing, trading, which will help for better price discovery. If we can get both the things put together, I think it's absolutely in the right direction and should help in the medium term the objective of doubling farmers' income. That objective will finally be coming closer to that.
When you say medium term, you mean at least a year away or even more?
I think it's going to take some time. Look, these things we have struggled with for decades. So to expect that within a few months, all these things can be ironed out would be difficult.
No, I was a little more hopeful of agri. The other ones I have heard enough number of times and therefore less hopeful, mining and coal and power. But Sonal, actually on that issue, are you really of the view that there can be a bunching up of reforms and some higher productivity can be ushered in these areas? I'm asking you because there is not much demand. I mean, we don't need so much coal now. Do you expect reforms will come, or coal mining, commercial coal mining will be pushed at a time when both global and domestic demand is so poor?
Latha, the reforms are more a medium-term tool. I mean, if you're looking at, here and now effects of COVID shock, then, you're going back to cash flow strategy, demand boosting strategy. The medium-term reforms are not an answer to the COVID shock for sure. But, it is really during these times of crisis where governments do typically push in reforms, and that's the context in which we need to look at these reforms. Now, of all the sectors, clearly the agriculture sector has been one which has been, sort of under government control for a long period of time. That has hindered private investments, that's hurt farm incomes. I think there's a lot of potential clearly on the agriculture sector if this is indeed implemented in practice the way the reform has been announced. So implementation is something we will need to see. going forward. Now, one doesn't expect the impact of, any of the reforms that have been announced right now to be visible anytime in the next 1 year. We are talking about something that will perhaps show up over 2 to 3, 4 years or so. In the near term, what the reforms can do, like I said, is more signaling. It's a signal from the government that we are interested in getting more private risk capital into, let's say, agriculture or into public sector enterprises or into defense in order to fund our growth, because as a country we are constrained on the savings side. So from a near-term perspective, I think it's more a signal to get more risk capital, and over a period of time, if these are indeed implemented in practice the way it's been announced on paper, then I think yes, it could be positive, but we'll need to see how this is executed on the ground.
Yes, I agree with you. And in the past, for some strange reason, minority governments have done a better job of changing the rules of the game. We haven't seen it from strong majority-backed governments, but that may be only a coincidence. Shaumya, I wanted to ask you the point that Sonal was making. Are you expecting that there can be some big fiscal push in the second half, when the lockdown ends and it makes sense at that point to encourage consumption or, propel productive activity? Do you think there can be some understanding between center and states and we can get a GST cut or something later on? Are you penciling it in?
Yeah, I think, Latha, at some point of time, we might need a fiscal stimulus. And I just want to take a step back and point out to something. I think we have been discussing about the timing of the fiscal package. But if you actually look into the history of all countries implementing the fiscal and the monetary package, they have all done it possibly before the lockdown. So it's actually not, the timing is important in the sense of survival of the person. And I think from that point of view, we need to understand whether this package is sufficient for the economy to survive during the lockdown period. So that's the point. And
do you think it is?
I think more could have been done because of the fact that given the fact that the growth numbers doesn't look that great at this point of time, maybe a little more amount of cash impact could have helped. So the direct impact that could have been staggered, that could have helped. And to a specific question whether there is package, yes, I expect that the central bank will also come out with some announcement possibly in the next couple of days, because right now the emphasis, now the move will now shift to the RBI in terms of understanding the nuances of the entire situation, and possibly towards the second half when the economy starts to show some amount of traction. And you also need to remember, I think you are having about the agricultural sector, you also need to understand one very important data is in the last couple of years, a share of this agricultural sector, a lot of activities have moved into the allied activities. So from that point of view, it also remains to see that how this price discovery would help the farmers in the short term. I think it will be more of a medium term objective. So taking all these into cognizance, I hope that there could be some amount of maybe targeted package for the second half as the economy tries to get some traction.
Okay. Well, one suggestion I heard from a quarter, Sonal, and since you straight away delved into what should be the longer term, what should be the next set of fiscal steps, that's why this question to you. Once suggestion has been that ultimately who brings growth to India, it is the entrepreneurial class. And even the top 100 companies, at least 90% of them will be completely denuded of their equity capital if the lockdown continues. Many of them have already lost their equity capital. So although it may sound iniquitous, is it important for the government to step in and somehow restore that equity capital? Otherwise, if 90% get into bankruptcy, you are in a serious position. So do you think some pro-corporate steps are needed in the second half?
Well, Latha, I think one sort of missing element in the package that was announced, from our perspective relative to our expectation was perhaps some support for sectors like aviation, because, those sectors will be under stress for a longer period of time than others. So that is something that was sort of missing from the corporate and the formal sector. But other than that, I mean, sort of looking forward, whether pro-corporate specific steps needs to be announced. I think the design of the fiscal strategy going forward will be important. Whether you want to indeed do a tax related stuff or more on the expenditure side. We definitely need more simplification in terms of tax compliance, contract enforcement, etc. But in terms of the design of the fiscal strategy, my bias and recommendation would be more in terms of infrastructure spending, because it creates jobs for rural workers. You were asking earlier whether the NREGA increase will benefit rural demand, but these migrant workers have lost income, and that lost income is being replaced. So on an aggregate, right now it does not really boost demand. But if you do more, let's say, infrastructure spending in the medium term, partly government finance, partly private finance, maybe partly in partnership with some of the foreign governments, you're creating jobs and income in the hands of the rural consumers, and you're creating medium term potential, plus you're creating sort of the infrastructure and foundation to be able to compete on a global scale. So I think the design of the fiscal will be important, and infrastructure has to be front and center in that design.
Okay. Well, Samiran, one topic we didn't discuss, and though Sonal had written about it earlier about rating agencies, how is the external sector shaping up at all? We've seen a sharp rise in crude prices and an even sharper rise in gold prices. Is it telling us something about global inflation? And do you think that this whole restraint on the fisc is because of some very legitimate fear of the external environment?
I think there are two reasons why we can still expect another round of fiscal stimulus later on in the year. One is the aspect that you were referring to, which is that in any case today we have massive uncertainty on everything, from growth to external sector to the spread of the virus. So in that period of uncertainty, to focus on macro stability is more important from the government's perspective, and that's why an unfettered increase in fiscal deficit might have gone contrary to meeting that objective, which connects with the discussion about rating agencies, etc., that a rating downgrade to manage the consequences in times like this would be more difficult. The other part is to just simply have a better understanding of who needs a demand stimulus. Today, if you go out, everyone needs a demand stimulus because times are such. But in 3-6 months' time, you would probably be in a better position to see that how much of a demand has reverted back to more or less normal on an automatic sense.
Fair point.
So that way you can tailor your fiscal stimulus much effectively. So because of these two reasons, I'm not completely losing my hope on another round of fiscal stimulus, but yes, it's
now,
small.
I take your point. Actually, another expert told us that the best stimulus for India is to get back to work. So then you will know what else is needed after India gets back to work. I'm giving you all 10 seconds. Please tell me what you're expecting from the Reserve Bank or in June 6th or whenever. Only 10 seconds, Soumya.
I am expecting an aggressive rate cut from the RBI in the June policy.
375?
It could be more than 50. It could be at least 50.
Okay. Samiran?
50 basis point rate cut and SDF.
Okay. Sonal?
75 basis point cumulative cuts and more push on unconventional policies.
Okay. Let's see what they are, because that's where the next line of hope will shift. Soumya, Sonal and Samiran, thank you very much for joining me in this conversation.